The market isn't broken. It's working exactly as designed. Every crash you see on the news, someone planned for it, and someone profits from it. You panic, they prepare. You sell, they buy. You work, they wait. The biggest wealth transfers in history don't happen when things go up. They happen when everything falls apart. And that's not a bug. That's the system. This video will show you how it really works. Why the rich always seem to get richer, even during disasters. And more. Importantly, what you can do now to protect and grow your money. On the passive path, we don't follow hype. We follow patterns. Because history may not repeat, but it definitely rhymes. This isn't about chasing the next hot stock. This is about understanding how money moves when the world is in chaos. Let's get one thing clear: you don't need to be rich to think like the rich. You just need to stop thinking like a victim. So stop hoping for things to get better. Start learning how to make them. Worst moments work for you. Let's break the cycle. Let's start by exposing the real rules of the game. The stock market is not a reflection of the economy. It's a tool. A very precise, very profitable tool. The people at the top don't guess. They position. While most people watch headlines, the wealthy watch cash flow. They sell when you're confident. They buy when you're scared. That's why the average investor loses in every crisis. Not because they are unlucky, but because they think the game is fair. In 2008, middle-class families lost homes. Banks got bailed out. CEO got bonuses. In 2020, small businesses shut down. Wall Street soared. And now it's happening again. Only this time, the tools are sharper. And the cycle is faster. Interest rates go up. Tariffs go up. Markets go down. Wealth moves. When Warren Buffett sells Apple stock at the top, he's not guessing. He knows something is coming. When Elon Musk and Mark Zuckerberg unload shares of their own companies, they are not testing the waters. They are getting out before the flood. It's not coincidence. It's timing. It's coordination. It's strategy. So if you see the richest people exiting, don't ask what the media is saying. Ask what they are seeing that you're not. Most people wait for confirmation. The wealthy move on anticipation. That's the difference between being a spectator and being in the game. If you follow headlines, you'll always be late. Follow money instead. Because money leaves footprints. And those footprints, interest rates aren't just about inflation. They are about control. When the US raises rates, global money flows back to the dollar. Not because it's safe, but because the return is higher. Other countries panic. They sell local assets. They convert to dollars. Their currencies collapse. And while their markets bleed, capital leaves. Straight into American hands. Now add tariffs. That's not just about trade. It's economic warfare. Tariffs force exporters to make a brutal choice. Either raise prices and lose customers, or eat the cost and lose profits. Both lead to the same place: layoffs, closures, debt, recession. A small manufacturer in Vietnam exports parts to the US they sell for $10. America adds a $4 tariff. Raise the price to $14 and no one buys. Keep the price at $10 and they lose money. Either way, they cut staff or shut down. The economy contracts, and their currency weakens. When dozens of countries face the same trap, the effect is global. Factories close. Imports drop. Debt rises. Currencies fall. Now step back. When global currencies fall, assets get cheaper. To who? To the ones holding strong dollars. American capital then buys foreign businesses, real estate, and stock for pennies, all triggered by a policy that claimed to protect American jobs. But what really happened? The U.S. used financial tools to strip value from other nations, not through war, through pressure and timing. This isn't a side effect. It's the entire point. Every move creates a domino. Every domino moves money. And every dollar has a destination. That destination is never random. It's always upstream. The U.S. doesn't always need to print more dollars. Sometimes it just makes yours disappear. That's how wealth transfers happen quietly, without headlines, without votes. Markets crash, panic sets in. People sell fast, cheap, and all at once. But the buyers, they are waiting with cash. They are patient. They understand the cycle. Here's how it works. Investors borrow money using stocks as collateral. Stocks go up. They borrow more. Then the market drops. Margin calls hit. They must repay the loan. But they don't have cash. So the brokerage sells their stocks automatically, and that selling triggers more drops, more panic, more forced selling. It doesn't stop until most small investors are wiped out. Then, at the bottom, the ones with cash step in. They buy assets at 30, 40, even 70% discounts. Not because they are lucky, because they were ready. Now look at what follows. Those same investors sell a few months later. Market rebounds. Media calls it a miracle, but it was always part of the plan. The real trick is understanding that value isn't lost in crashes. It just changes hands. The question is, will you be holding cash when it happens, or will you be the one forced to sell? On the passive path, we always ask, who's building positions while everyone else is breaking down? That's the moment you should pay attention, because that's the moment wealth is being. Most people think they can't win because they are small, but being small is actually your advantage. Big players need months to move. You only need minutes. Warren Buffett may need time to shift billions. You only need to decide what to do with a few thousand. Flexibility is power. Speed is leverage. You don't have to predict the market. You just have to ride the wave after it forms. You don't need to lead. You need to follow smart money without delay. When crashes hit, the wealthy don't buy right away. They wait for one thing: capitulation. That moment when even strong hands give up, when optimism dies, when people swear off stocks forever. That's when cash re-enters. And if you've been patient, that's when you act. Buy slowly, quietly, safely, not all at once, not chasing spikes, just building as fear peaks. It's not gambling. It's calculated exposure. This isn't timing the bottom perfectly. It's entering when risk is lowest and upside is greatest. You're not trying to beat anyone. You're trying to protect your capital and grow it over time. That's how you turn a crash into your foundation, not your funeral. If you missed the top, don't chase. Wait for the next setup. The market is a machine. It always gives another chance, but only to those who are watching. Currency wars don't make noise. They drain nations quietly. When the U.S. raises tariffs, it forces other countries into tough decisions. If they raise prices to offset the tariff, they lose sales. If they absorb the tariff, they lose profits. Either way, local businesses shrink, jobs disappear, governments collect less tax, national currencies fall. Now imagine dozens of countries in the same trap. They all race to devalue their currencies to stay competitive. But when they do, their assets also become cheaper. To the outside world, That's a discount sale. American dollars, still strong, flood in. They buy factories, real estate, and infrastructure all for cheap. This isn't aid. This is acquisition. And it's all triggered without a single bullet. Just policies. Now look at the pattern. First comes pressure. Then comes panic. Then comes purchase. This is how empires are built in silence. The cost is paid by workers in collapsing economies, and the reward goes to those who printed. Nothing but bought everything. When the dollar strengthens, every other currency weakens. But people don't notice until it's too late. They only see that groceries are expensive, rent goes up, gas drains their wallets. What they don't see is their currency losing ground, not just against the dollar, but against assets that now feel unreachable. They can no longer buy homes. They stop investing. They pull out of markets. And when they do, prices fall even further. Then the rich step in again. Buy more, wait, and restart the cycle. This is not theory. It's the blueprint of financial conquest. You can't stop it, but you can stop being a victim of it. That's why staying informed isn't optional. It's survival. Because when the wave hits, your only job is not to drown. Your goal is to be. Most people won't see the opportunity. They'll only feel the pain. When markets fall, fear takes over. People sell their stocks. They cash out their savings. They give up on investing entirely. But that's exactly when the real players move in. Not with emotions, with plans. They've been sitting on cash. Not because they are scared, because they are waiting. The best returns come from the ugliest markets, not from rallies, from crashes, but only for those who are prepared, not those who are. Guess it. In 2008, people who were bartenders, factory workers, and delivery drivers bought assets while everyone else was afraid. 10 years later, some of them became millionaires. Not because they got lucky, because they stayed calm when others panicked. If you can't stay calm, you can't stay wealthy. The system isn't going to stop creating crashes. So your job is to stop being crushed by them. You don't need to time the bottom. You just need to stop selling at the bottom. You don't need to be rich to buy the dip. You just need to save cash while others spend carelessly. Wealth comes from decisions made before the spotlight. The setup always looks obvious in hindsight, but in the moment it feels terrifying. That's why the crowd always misses it. They want safety, certainty, comfort, but those things only come after the risk takers have already won. If you missed the last crash, learn from it. If you missed the rebound, don't chase it. Wait, plan, prepare, because the next setup always comes. And this time, the biggest threat to your wealth is not the market. It's your reaction to it. Fear makes you sell too early. Greed makes you buy too late. Discipline is the edge. Patience is the weapon. Right now, the smart money is not chasing highs. They are watching, stacking cash, buying time. That's what sleeping giants do. While others are chasing short-term gains, they are positioning for generational shifts. They are not trying to win this week. They are trying to win the next decade. Your job is not to predict the next bounce. It's to survive long enough to take advantage of the next drop. Ask yourself one thing. If everything fell tomorrow, do you have cash? Do you know what you'd buy? Would you freeze or would you move? Most people hesitate. By the time they decide, the window closes. The market rebounds. The value is gone. The opportunity passes. Don't be one of them. Build your watch list now. Stack cash now. Understand your risk now. When the next drop comes, you won't be panicking. you'll be ready. Because the next crash isn't a tragedy, it's a test. And only those who study pass it. On the passive path, this is the mindset we build. Not chasing hype, not reacting emotionally, just clear, rational action. That's how wealth is built. Quietly, patiently, and intentionally. The time to prepare is before the panic. The time to strike is when it feels the hardest. Done right, one crash can change your entire future. And that's why we don't fear the storm. We plan to walk through it. Every crash holds two paths. One leads to fear, regret, and lost opportunity. The other leads to clarity, control, and quiet wealth. The difference isn't what happens. It's how you respond. You've seen how the game works. Now it's your move. Build your knowledge. Protect your cash. Follow the signals. Act with purpose. If this video gave you something to think about, hit like to support the channel. Subscribe to The Passive Path to keep learning how to build real wealth. Drop a comment with your thoughts or strategy. It helps others learn too. And share this video with someone you care about, especially if they've been worried about where the world is going. Good luck on your journey. Feel free to explore the other videos on this channel. There's more waiting for you.